So we have seen till this third party procurement we have seen. Okay. So first one was procurement of material for stock purpose. I believe all of you have seen the recording. If not, you can go through the recording for yesterday. If you have any doubt, you can let me know. Okay. Or else normally this is just for a introduction, or we can say process description. So later on we are going to the details. So after third party there is a outline agreement is there. Okay. So what is the outline agreement? Basically, we can say whenever you require some product in let's say for longer period of time, let's say 6 months or 1 year or 2 year, you need something. Okay, so for that one, it is better to have a agreement or a contract, right? So if you are buying something on a regular basis, or you need something for, let's say, for coming 1 year or 6 months, that is the time when you can do a agreement with the supplier or vendor, so that you can negotiate between a lot of terms. Let's say the price, let's say delivery time, quality of the product, so many things you can negotiate with the supplier. Okay, so in this outline agreement, basically there are two processes are there, or two types of outline agreement is there. One is a contract, and second one is a scheduling agreement. So what is the contract? So basically contract is a normal, we can say we will do a agreement with the supplier for some period of time, let's say for 1 year, 6 months, or any period of time. We will create a agreement with them, and based on that agreement we will be providing purchase order to them, and they will be providing us the material. So only in this way what will be there, let's say you can create a purchase order with respect to a contract. Okay, so when you do a contract with a supplier or a vendor, mostly we can negotiate with the, let's say, price term, right? Take an example. Let's say household example. If I say, let's say when you are building a home, right? So then you will be needing some cement bag, some construction material you will be needing. So if you negotiate with the some of the shops, like I will be taking the cement bags or some of the construction material for coming next 1 year. Okay, so you can give me the material at one price point. Let's say you can negotiate between that. Okay, so he will be getting continuous business, and you can get your material at a good price. So similarly, most of the companies, they will do most of the product. Let's say if I am purchasing something from a supplier regularly, so I can create a contract with them. Okay, so normally this is the contract. Second process is, let's say you know when you require the material. Okay, in that case you don't have to create a purchase order regularly. So what you can do, you can create an agreement, and you can send the delivery dates to the supplier, that on this date I will be requiring this kind of material, so please supply that. Okay, so typical example will be, let's say if we say about the household example, so you can say when you buy milk from a vendor, or when you buy some newspaper from a vendor, you don't daily, you don't ask them that tomorrow I'll be needing let's say milk, or tomorrow I'll be needing the newspaper. So you will be having a contract, or you will tell them that I will need the newspaper for from tomorrow onwards. They will be giving you the items, right? So every day they will be providing you the item. So similarly, let's say in your plans or somewhere, let's say you know that in every month, let's say there is a schedule for the manufacturing, or there is a schedule for the, we can say, selling or anything. Okay, so you can create a schedule for that one. Let's say if it is defined that every 10 days or every month first I would need 100 items or 100 products, right? So in that case what you have to do, you don't have to send the purchase order again and again every let's say 5 days, 10 days. You don't have to send the purchase order again and again. What you can do, you can directly create a scheduling agreement, and you can send the delivery date that every month first I will be needing 100 items, right? So then you don't have to send the purchase order and all. You don't have to send purchase requisition and purchase order. You don't have to create those kind of things. You can directly send the what kind of quantity of material you need, on which date you will be needing, right? Okay, so you don't need to send those kind of things. So directly on the delivery date, let's say 1st of January, you are saying I need 100 material. So supplier will direct send you 100 material on the 1st of January, right? So this is basically the outline agreement. In the outline agreement, this will be the contract and scheduling agreement. Next one is stock transfer order. So what is a stock transfer order? Let's say you are having material in multiple plants. Let's say you have couple of plants. Let's take an example. You are having couple of plants. One plant you are manufacturing some of the item, or let's say X material you are manufacturing in one plant, okay, but you are getting the sales order in the other plant. You are receiving a sales order in the other plant. So what you can do, so either you can place a third party order that my material is in the second plant, and directly from there I can supply it to the customer. This is the first process. Second process, what you can do, you can transfer the good from one plant to another plant, and you can supply the material from the respective plant. So let's take an example. Let's say you are having Tata Motors and Tata Steel. These are the, let's say, plants, or two company codes are there. Okay, so Tata Steel is manufacturing the steel material or steel sheets they are manufacturing, right? So now when in the Tata Motors they will be require the steel sheet. Okay, so what they can do, they will not purchase the material from Tata Steel because it is a single entity. So there will be no purchase will be happening. So what they can do, they can send the material from one plant, let's say Tata Steel, to Tata Motors. That is basically called a stock transfer process. Depending on the situation, there are different type of stock transfer processes are there. Okay, mostly we can say 4 or 5 types of stock transfer processes are there. So in the topic we will discuss what are the different type of stock transfer processes are there. But basically this will be the concept of stock transfer order. When you have some material in, let's say you are having multiple entities or multiple plants, and you are having the stocks in different plant. So whenever it is required, so you can transfer the material from one plant to another plant. So that is basically called as a stock transfer order. Okay. Next one is a external service procurement. So what is a external service procurement? So basically, let's say you are purchasing some of the service from the outside. Okay, so let's say you are working in a plant. So plant is having, let's say they will be having certain machinery, they will be having certain, let's say, desktop, there will be certain ACs will be there. So for that one there will be regular servicing will be required, or let's say you need to paint something. Okay, so or you need to clean something, so you are going to purchase some of the service, that someone come and they will paint that machine. Okay, someone will come, they will do the preventive maintenance of the machinery. Okay, so you have to reach out to the service provider and they will give you the service. So in that case you are purchasing a service from outside, so that is basically called external service procurement. Okay, so in the external service procurement there will be no goods receipt will be there, rather you will be having a service entry sheet like a register, right? So whenever you visit some of the company, they will be having a register like who is coming, why is coming, and what is the purpose of visit. So same way there will be a service entry sheet will be there. They can mention what kind of services are there, what is the price of that one, what is the quantity of that one, what is the date of service. So everything they can enter it in a service entry sheet, and based on the service entry sheet there will be invoices can be created based on that. So this is basically the service procurement. So basically we will be using these 10 processes, or these 10 processes are used widely. We can say everywhere these 10 processes means one or another. This is the majorly used processes. Okay, if we leave the import procurement, other than that means in S4HANA right now there is no import procurement is there in MM side, but other than that you can see a lot of process in your, let's say, where you are going to work, there you will be getting these kind of procurement process. Other than this procurement process, there are some other procurement processes are there. Let's say asset or capital goods procurement means whenever you procure some of the assets from your for your company, let's say you are purchasing machinery, you are purchasing some assets for your company. Okay, so those are basically asset or capital goods procurement. Okay, that is a different concept. So this is also some companies they will using, let's say your company is going to start, so you need to procure some of the capital goods or something. So in that case there will be some asset procurement will be there. Okay, so next one is your returnable transport packaging. Let's say you are purchasing some of the material which is coming through a packaging material. Let's say gas you are purchasing from a gas vendor, so there will be a cylinder will be there, there, you completed using the gas, then you have to return that gas cylinder to the supplier so that he can provide you a full gas cylinder. So same way, in the, let's say, in the companies or industries also, there will be some materials, let's say mostly the gas materials will be there, or let's say you are using some of the materials in the tanker or something, so that you have to return back to the supplier. So that is basically the returnable transport packaging materials are there. Then there will be non-stock material procurement will be there, and non-valued material procurement will be there. Non-stock means you are not going to store it, like we are, there will be some penny materials will be there which you are not going to take into your store account. And then there will be some non-valued material will be there, means the price will be very low, let's say your we can say consumable materials, so that you can say non-valued material. Let's say you are using the safety gloves, or you are using the let's say face mask, these kind of things, this will be non-valued material will be there. So these are also, in some cases, in some of the companies, these processes are also there. Yeah, blanket purchasing is there. So what is a blanket purchasing? So normally, let's say there will be these kind of material will be there, let's say very low price material will be there, or let's say you are not going to purchase that material very often. Okay, let's say yearly you are purchasing that, mostly let's say 5 to 10 times or something like that one. Okay, and the price is very low, so those kind of things we don't track. So what we will do, we will create a blanket purchasing. So blanket purchase order we will create, and there we will not mention anything. So whenever it is required, we can add the product, or we can take the purchase order for whatever material is required, we can take the order for that one. So that is basically called a blanket purchasing, means low, mostly we will use low value purchase orders or low value material purchasing, we will be using the blanket purchase. So these are mostly 15 procurement types are there which are being used, and mostly if we say first 10 are most essential. Most of the company, if you are going to a interview, these process will be asked. Related to this process, you will be getting some question. Other than that, if it is required, let's say that company where you are going to give your interview, let's say if they are using these kind of procurement, let's say asset procurement or RTP material or non-stock material, non-valued material, blanket purchasing. So they will be asking you that question, but most of the time these questions will not come. Okay, sometime these questions will come, but most of the time these questions will not come. Mostly you can expect the what is a, let's say, important topic that we can say. First one is a procurement of material for stock purpose, that is basically your standard P2P cycle. Then you can expect consignment material, subcontracting, third party, outline agreement, stock transfer process, and also external service procurement. So these are the processes which are widely used, and you are going to get the questions in the interview. One or another, you will be getting this questions on this one. So try to understand this process, try to remember this process. Okay, and while we go further, let's say while we go to the process flow and while we go to the subjective topic, then you need to add your points over there and make a note of it. Okay, like let's say if I say about the procurement of material for stock purpose, now this will be the process flow. Okay, we'll see it in a bit. So this will be basically the process flow. So you need to understand, or you need to explain the process in this process flow, or in this way you have to explain. Okay, so we will just see this process flow and all, but just for your, let's say, information, you have to explain the process while you are going to an interview. You have to explain the process in this process flow. Okay, this will be the process flow, you have to explain like this. And at the time, let's say at the time of GR and at the time of IR, there will be certain accounting entries will be there. So you have, at the time of GR, what is the accounting entry, at the time of IR, what is the accounting entry, so that whenever you explain the process flow, explain with the accounting entry, so that the interviewer will not ask you any further question on that one, like what is the accounting entries, what is the process flow. Okay, or what will be the accounting entry at the GR, at IR. Okay, if you are going for one shot, one single attempt, you are answering all of this in a, let's say, structured manner, then definitely they will not ask you any further questions, or they will not confuse you with different questions. Okay, So now let's understand a standard P2P cycle. Then we will understand what is the procurement, different types of procurement process flows are there. Okay. So what is a P2P cycle? Normally when you go into an interview, this will be the first question or this will be the common question what everyone asks. Okay, P2P cycle means procure to pay cycle, means from your purchasing to the payment, what are the processes in the business or in the SAP MM. So that is basically the P2P process flow. Okay, so normally the P2P process will start from the PR. Okay, what is a PR? PR is a purchase requisition. Try to note it down. Okay, when I tell you something, so try to note it down while I'm mentioning something. Please note it down for your reference. Okay, it will be helpful for you. Okay, it will be revision and practice for you. So what is a PR? PR is a purchase requisition. Purchase requisition means there is a demand. Let's say you need some product. Okay, let's say if we take about a generic example, let's say you need a mobile phone or your mobile phone is let's say broken, damaged, or it is not work. What will happening? There will be a demand will be generating that I need a mobile phone. Okay, so whenever you identify that you need a mobile phone, what will you do? If you know where to purchase, let's say you know, okay, I will get the mobile on a cheaper price from Amazon or from Flipkart on the big billion days. Let's take an example. Or let's say you know a local vendor, let's say any kind of mobile stores are there, let's say Chroma store is there, Reliance store is there. You know that from these stores I will be getting the mobile at a cheaper price. So you know who is the supplier or from where you want to buy. Okay, if you don't know, or if you want to search, let's say you want to search from where I can purchase it so that I can get some discounts or benefits. So for that one, what will you do? You will search for the suppliers or vendor. So that is basically called the request for quotation. So you identified the supplier, you ask them for a quotation. Like you are going to Chroma, you are asking for the price, and you are going to let's say Reliance Digital and you are asking them for a price. Let's say you are comparing that with the Amazon or Flipkart, you are comparing that one. Okay, so basically whenever you identify a demand of a material, then you will be searching for the correct supplier for it where I can purchase it. Okay, so that is basically called request for quotation. So you will be requesting for quotation from the suppliers, right? So once you are sending the request for quotation to the supplier, they will be providing you certain quotation or they will be send you the price detail. So that is basically called a quotation process. Okay, once you are sending the request for quotation, supplier will send you a quotation price. So you have to maintain that quotation in your system, that this vendor has given me a price of 10 rupees, let's say second vendor has sent me a quotation of 11 rupees or 15 rupees, third vendor has given me a price of 9 rupees or 8 rupees. So you have to maintain that quotation. Okay, so after you are maintaining the quotation, you will do a comparison. In SAP, we do the comparison only based on the price, not based on the other factors. Let's say delivery time, goods, or any other thing. We don't take into consideration, but we will take into the consideration only for the price. There is a price comparison. So based on the price, we will compare which price is the lowest one. Okay, let's say three vendors have given the quotation, three vendors have provided me the quotation. So what I do, I will compare them based on the price, and who will give the best price to me or the lowest price to me, lowest bidder, I will select that as my supplier, right? And I will send the purchase order to that supplier. Okay, so when I select the vendor, so this is basically this RFQ to quotation comparison. This process is called as a vendor selection process or supplier selection process, we can. Okay, in here we can select the supplier. Now this is one process. What is happening now? Let's say I say that, okay, you know where to buy the mobile. You say, okay, I'll buy the mobile from the Amazon where I can get the best price. So you know the supplier. If you know the supplier, directly you can create a purchase order with respect to purchase. This is a purchase order. So you can create a purchase order with respect to purchasing, that you place a purchase order to the supplier that I need a mobile. Okay. Or from this process, RFQ to quotation comparison, when you receive a when you finalize a supplier, then you can send the purchase order to that finalized supplier. Okay, so that will be again the process. So when the supplier is known, then directly you can convert from PR to PO. If the supplier is unknown, then you can go through this process, vendor selection process. You can go through that one, right? So now most of the time we don't go through this one, because let's say if you are doing a implementation or you are working in a support project, so normally vendors or suppliers are already known business. They means any company, they will be doing business for a long period of time. They know from where they need to buy, what will be the price, and all details that will be there stored as a master data. So you don't have to worry about the RFQ and all, but you need to know what is the process, what is the configuration, and what is the process flow for that one. So now while you are sending a purchase order to the supplier, supplier will send you a good, right? So Amazon, let's say you are purchasing a mobile phone, so you placed a order with Amazon that I need this mobile phone, so Amazon will send you a mobile phone, right? So then you have to receive that good. So that is basically called a GR process, or goods receipt process. Okay, when you receive the actual item or physical item you are receiving over there. Okay, once you are receiving the item, then there will be a invoice will be there, right? So you are purchasing something, so that is having a cost, so there will be a invoice will be there. So that invoice is called invoice receipt or IR process. Okay, so when you receive the good, with respect to that you have to create an invoice receipt, and with respect to that invoice receipt you can pay to the supplier or pay to the vendor. Okay, so payment is a part of your, we can say, payment department or finance department, so that will be there. So basically this will be coming under P2P cycle from PR to IR. Right now some places this IR process is also not a part of your purchasing side. Okay, this is also because this invoice receipt is, it belongs to or it contains some of the financial information, so that's why this is also handled by the finance team, right? So IR is a part of finance team, not for the purchasing side, correct? We can say some of the company, they include this IR process to the RTR people or to the finance people, so they will add that to them. So normally PR to GR is a P2P cycle. Okay, but normally this will be coming under your P2P cycle. This is a complete cycle. Some places IR is a part of P2P cycle, some places IR is a part of finance people. Okay, so as per your working, as per your let's say working area, if IR is included, then you have to look into this. If it is a part of finance people, then they will look. So basically this will be a P2P cycle. Okay, so while you are explaining this to a interviewer, how you are going to explain it? So if someone is asking you about a P2P cycle, so how you are going to explain it? So normally you can say P2P cycle will start from a PR. When there is a requirement is generated or the demand is identified, then we will create a purchase requisition. And if the supplier is known, then directly we can convert the purchase requisition to purchase order, and we will send the purchase order to the supplier. Then supplier will send us the material and we will do the goods receipt. With respect to that goods receipt, we will do invoice receipt. This is one process. Second process, if the supplier is unknown, then from the purchase requisition, we will be creating a request for quotation. With respect to that request for quotation, we will be creating a quotation, or vendor will send us the quotation and we will maintain the quotation. Then we will compare the quotation based on the best price. We will select our vendor, and then based on that selection process, we will place the purchase order with respect to that. So this is basically the process you have to this is how you should explain. Okay, don't go into the very much details, like let's say very tiny details. Don't go into that one. Let's say I need a product, this department will send me this purchase requisition, or this department will send me that one. So don't explain like this. So explain like it a proper way or a simple way. Okay, and again if they're asking how the PRs will be generating or how your PRs are generating in your company, so then you can let them know, okay, there are multiple type of PRs are there. Let's say manual PRs are there and automated PRs are there, and manual PRs are generated by the users or they are created by the user manually. Automated PRs are created by the, let's say, by the process, let's say through sales order or through let's say any other orders are there, through that one it can generate sales order, or let's say your MRP process, or let's say APO process, it will be generating. So now let's understand the different process flow based on this P2P cycle. Okay, so now we will understand the procurement of material for stock purpose. Okay, this is the same way as we have seen a standard P2P cycle or normal P2P cycle we have seen. It will work the same way. So there will be a purchase requisition, there will be a request for quotation, price comparison. Then based on that price, you will select a vendor and you will create a PO. If the vendor is known, then directly you can create a PO with respect to PR. Okay, then you will be doing the GR, then you will be doing the IR. So this is the stock purpose. Okay, now the second process is procurement of material for direct consumption. Now this will work as the same way of your stock means stock material, stockable material. It will be working in the same way, but there will be one change. While you are creating a purchase requisition or while you are creating a purchase order, there you have to maintain a cost center. Okay, now this was the question yesterday, what is a cost center? Now let's say you need some of the product at your production floor. Okay, let's say you are having a maintenance department. So now maintenance department is saying I need some of the material to for a, let's say, for a preventive maintenance order, I need some of the material. What kind of material? Let's say they say that I will be needing some let's take an example. Let's say they are saying we will need some safety gloves, we will be needing some grease material, some oil material. So whatever material is required for their preventing order. Okay, now these kind of things we will not store in our stores. Okay, because it is not relevant that we are not going to issue those kind of things to someone. So directly we can purchase this material, let's say these consumable materials we can directly purchase, and it will be used by the maintenance department. So how will someone know that this is being used by the maintenance department? So maintenance department is the place where the cost is actually happening, right? Able to get my point? Okay, let's understand it this in a simpler way. So let's say in your household item you are going to market. Okay, when you are going to market, let's say you are purchasing certain material, let's say your kitchen items, let's say you are purchasing the kitchen staples you are purchasing. In that, what is happening, let's say your kid or someone is saying, okay, I will need a, let's say I will need a notebook, or I will need a book, or I will need a pencil, or I will need a pen or rubber or anything. Let's say your kid is saying that I need this kind of. So what is happening? So now you don't have to, every time you don't have to, let's say you will not purchase, let's say 10-15 notebooks and you store in somewhere and you are going to give one by one to your kid, right? So whenever it is required, like whenever the demand is there, let's say someone is saying, or let's say your kid is saying that I need a notebook, so directly you purchase that notebook and you give that to your kid. So directly your kid is consuming it, right? So same way in the plant, whenever there is some department is asking that we will need a product, okay, which is a consumable product, and you don't store it, so normally you will issue that to the department. So to have that expenses in a, we can say, to manage those expenses or to identify those expenses, we will create every department or every place as a cost center. Okay, let's say here you can say your maintenance department is a cost center. Let's say you need some of the item at your production floor, let's say you need some carrot or you need some pallets at your production floor. Okay, so in that case the production floor will be your cost center. So directly the pallets you are not going to store in your storage location, you will issue that material, or you will directly give that material. Once you are purchasing, you will directly give that material to the, let's say, production floor, and they will be using it. Okay, so when you create a production floor as a cost center, then whenever you are, let's say, purchasing that material, you have to assign that cost center in your purchase order, so that whenever you receive that material, it will be directly given to the that cost center. Okay, able to understand? So that is basically your cost center. So when you procure some of the material for direct consumption, then you have to give the cost center over there. So that we'll see in the process means while we are creating a purchase order, at that point of time we'll what is the cost. Next one is a pipeline procurement. So in the pipeline procurement, here there is no PR, no PO concept is there. Directly you will create a info record with respect to your supplier. You will be creating a material supplier combination. You have to create a info record. Whenever you require, you directly do the goods issue and you settle the liability. Okay, you pay to the supplier or you pay the vendor. That is what the pipeline process. Okay,
Info record is like PR.
no, it is a information record, it is a master data. Okay, Info record is a combination of your supplier, material, purchasing organization, plant. With respect to this, there will be certain conditions will be there. Let's say what will be the price, what will be the delivery time, what will be the confirmation control, what should be the taxes. So every information should be there inside your purchase info record. So any information related to the combination of your material and your supplier, you can get that data inside the info record. Okay, that is a master data. We will set it up while we are starting our work. Okay, so next one is a consignment process. So consignment process is similar to the pipeline process. So here we can directly create a info record, but here we will have the same concept as a PR. We can create a PR, we can create a PO, PRPO, and we will receive the GR with respect to our consignment material or consignment stock will be receiving. Then we can do the goods issue, then we can do the settlement for this product. Okay, so that is basically the consignment material. Next one is a subcontracting process. So in the subcontracting process, there will be a PR will be generating for the end product or the final product. Okay, then there will be a PO will be generated with respect to PR. Then there will be a goods issue will be generating for the raw material, because we are going to manufacture this product from outside. So for that one, we will issue the goods to the supplier. Okay, so we will do the goods issue to the supplier for the raw material. Then we will doing the GR for the end product. Okay, so let's say we will be doing the GR for the end product. Then we will be doing the invoicing for that end product, and we will be paying to the supplier or paying to the vendor. Okay, so that is basically the subcontracting process. Now next one is third party process. So what is a third party process? So let's say there is a sales order is created. With respect to that sales order, you can create a purchase or purchase requisition, means this will be automatically created. Then there will be a purchase order will be created with respect to purchase requisition. Then this purchase order will be sent to the vendor, but there is a change in here. In the purchase order, normally in the purchase order we will be having the delivery address as our own address. Okay, but in case of third party procurement, when the purchase order is created with respect to a sales order, okay, in that case the delivery address will be your customer address. Okay, so the delivery address will be your customer address, and vendor will directly send the material to the customer. Okay, then there will be a customer invoice will be created, and you have to pay to the you have to settle or you have to pay the customer invoice. Okay, so we will discuss till this point.